Welcome to the closing beat, everybody. Happy Friday. How you doing out there? Hope you had a good week. It was certainly a busy week. We got a lot going on here. I will be covering the stock market here with you today. So daily show that we do, we call it the closing beat, usually over there on the other stage. Today we're kind of hanging out in the bar, so decided to film from here. We're financial advisors here at Jazz Wealth. We're just doing things differently. Other advisors just, well, I don't know what they do on a daily basis, but we like to engage, we like to entertain, stay ahead of our customers. We do that with weekly classes. We did one last night, going over some of the stats and geeky stuff about the stock market. I might share a little bit of that with you here today. And we also do weekly emails every week to give you an idea of what's going on there. We're also playing a game, and we have a winner. Every week we play a game called Guess the Dow. If you could tell me where you think the Dow is going to close without going over, Price is Right style there, we will send you $100, or if you're a customer, we'll credit your account a $100 gift card. Our winner this week is a customer, Paul Gilbolt. 21623.22 was his guess. He was the closest without going over. Congrats, Paul. We have already alerted you, and we'll be crediting your account next week the $100. If you are one of our customers here, it doesn't affect your contributions or anything, so you can still play even if you've maxed out your IRAs, Roth IRAs, or what have you. If you missed our class last night, go into the dojo. It is the most current class listed there. We went over some of the stats of the current market, what's going on out there, kind of covering the good and some of the bad as well. Our Jazz Artist of the Week will wrap up with George Duke. He's got a song called Rush Hour. It's best watched live, to be honest, in his later years, but really cool, kind of funky song there to wrap up the week. Hope you'll check it out. Let me know below who should be our Jazz Artist of the Week next week. I've got a couple ideas, but in case you guys aren't as well versed, or maybe you are and you've got some suggestions, so check it out. Let us know. Stock market today, you lost 915 points. That's about 4% on the day. For the Dow, 88 points, or 3.37% on the S&P, and 295 on the NASDAQ. Doesn't really feel like that much, though, does it? It's kind of a respectable pullback at the moment. I, unfortunately, think it didn't tell us a whole lot. If we go over to the S&P 500, you can see the performance over the last couple days, basically 20% off the lows, and the pullback today is sort of a respectable, normal pullback. Granted, it's a lot of points, I'll give you that. That makes it seem like it's a lot of points. But when we've rallied up as much as we have over the last few days, it looks just like a normal pullback. You would look back into a normal market way over here and say, well, hey, we had a nice 4-day stretch. You get a nice 3-day pullback, another rally, a 3-day pullback, another rally, etc. That's essentially what's going on here so far, just magnified by many, many percents because of the volatility. So sadly, I don't think that really gives us enough information. What I was hoping for today was either a quiet day where nothing happened and we just sat near the highs. That would make the bulls feel like they've got the right position and that the bottom is in. Or I was hoping for an extreme sell-off for the day to where we could erase like all of yesterday, something really nasty, so that we could then get people thinking that there may be more lows to come. So I think today didn't really give you any new information. We did get our $2 trillion stimulus bill officially signed now by the House and the Senate. Senate yesterday, House today. It is on its way. I believe President Trump just signed off on it, actually. So that is official. You got paychecks coming your way. Make sure you filed your taxes for last year. If you have not filed your taxes, you do not have to pay. So this is a good point real quick. If you are entitled to a government stimulus check, which last Monday I did a video as to how the last one worked to give you an idea, it's almost identical, exactly how they're going to do it this time. So if you find that you're entitled to the $1,200 or $500 per child, you still have to file your taxes for 2019. If you haven't done it yet because you're like, well, hey, I got till July 15th now, you only have to file. You don't have to pay the money if you owe them. You just have to file, and that will entitle you to the check so long as you qualify. So anyways, we got that rally midday. Let me see if I can show this here. We got the rally midday off the stimulus news. You can kind of see it right from in here, just all day creeping up, creeping up, creeping up. But then we had what is our typical Friday, what we call it the virus Friday, right? Risk off on a Friday. Nobody wants to take risk into the weekend, especially when the U.S. now has more cases of the coronavirus than China and Italy. And so it's perceived that things are getting worse, not better. We're actually doubling the number of people every 5 days. And so that made people probably say, I don't know. I don't want to take risk into the weekend. So you saw some selling into the close, and we stayed basically there through the lows. It was another virus Friday. We've seen these Fridays where people don't want to take risk. We talked about that yesterday, and I've got some data for you. Let's pop it up here and take a look. Virus Fridays, Wall Street is calling them there. For this month, there's only been one Friday that was positive. It was a seriously positive day, but what we did is color code each one of the days here on the chart. So the first Friday of the month, down 1.7%. The second Friday, up a whopping 9%. Then down 4.34 and down 3.37 as of today. Okay, so we got 4. Yeah, that's right. I put down just below, in case you're interested, the average Friday performance is basically flat, and that's the average because of how strong this mid-Friday was here. Best weekday so far of March was Turnaround Tuesday. So it has lived up to its name for the month of March with a 17.5% gain. Worst day was Wednesday and Thursday, of course, that both had declines if you want to look at the charts there. Fridays has been the month of March has been an extremely volatile month in general. So I just want to share that with you. Fridays being down for the most part, you can kind of understand why today it did the exact same thing there. Anyways, you also probably want to look at it like this. We had an amazing bounce off the lows. Anybody that invested somewhere near the lows as a short-term trader, short-term investor, likely thought, let's take some profits going into the weekend as well, adding to the selling pressure. So that's what you have there. In terms of the markets today, the Russell 2000 beats the S&P. The Dow was the weakest out of the group there, losing over 4% on the day. Now, as far as the decline here, at the lows today, we were down about 4.2% on the S&P 500, exactly 4.2%. We closed down 3.3%, and again, it doesn't really feel all that bad. That would normally be a very nasty day in the market, but considering where we're at, doesn't really feel all that bad. So that's what we have there. We're going to talk about some recession stats here in a little bit, so get ready for that. But let's move on here for the rest of this stuff. In the S&P 500 today, you've got REITs at the top of the list. You got things like Extra Storage Space breaking above the 20-day moving average, Avalon Bay Communities. Now, these guys were beaten down. This is not that this is somehow a strong sector. These guys were really beaten down. So this is a counter-trend bounce continuing to move forward here. You got UDR. You've got Apartment Investment Management, also higher. Look at how extended that was in the short term. You've also got Equity Residential bouncing as well. Those were your top gainers in the S&P. They all happen to be related to the REIT space. On the downside, well, it's nasty, but here we go. Norwegian Cruise Lines losing over 20% today. This thing has been bouncing 20, 30%, falling 20, 30%. That is the definition of volatility, in case you've never seen that before. Norwegian Cruise Lines as the weakest one in the S&P 500. Carnival Cruise comes in second place. Royal Caribbean, not a distant fourth. And those are nasty days. Why? Why were they down today? You could argue a little bit of profit taking from the serious bounces that they've had this week. Also, did you happen to notice in the stimulus bill, not a word about the cruise lines? Nothing. They were left out, which means there's probably some separate bill coming along if they need the money. But what happened today, because they were not in the stimulus bill, Carnival Cruise, they decided we're going to go ahead and raise, how much was it? $7 billion. They're going to take on $7 billion in debt. And so those are some of your weaker ones in the S&P 500. Interestingly, Harley-Davidson pulled back quite a bit today as well. And some of the gaming stocks, your casino companies, Las Vegas Sands, win as well, trading a little bit lower. Going over to the sectors today, REITs were one of your leaders, adding 1.5% on the day. Utilities also did well today, about a 0.5% gain on the day, back to the 20-period moving average before finding resistance. So now we know that is the known resistance area. And consumer staples held up, about a 0.5% loss on the day. The majority of those three sectors, the gains came from REITs, as I previously illustrated for you. You've got home builders. They were down about 4% on the day. They took a break. Look at that. 33% run up off of the lows like that. So for it to pull back 4% is a fair trade-off, 1/10 basically of what it had rallied. That is, it's healthy. It's sort of shocking that it's that much, but it's still healthy in this market environment. I think that's okay for now. Again, you need more information. I just think we didn't get enough information today. Industrials down 4% as well. They got back up almost to the 20-period moving average. They had a 30% run in just the last 3 days. 30%, average 10% a day. That does not normally happen in this sector. So for it to pull back a little bit, totally understandable. Weakness in this sector comes from Boeing. The stock was down 10% on the day. Boeing basically told the Treasury, we don't need your money. We don't want your money, we'll go raise it elsewhere. And Treasury Secretary Steve Mnuchin actually pointed that out today. So the stock was a little bit lower because a lot of people think it's going to be more expensive to get money in the outside markets than to just go to the government, maybe give them a little equity, do something there, help them out. But anyways, that's what you have there. Remember, they suspended their buyback program as well as the dividend earlier in this week. You've got retail, a little bit lower on the day, 3.7%. Had a 20% run off of lows. These are amazing bounces off the lows. Fascinating week to study the markets if you're interested in that. 3 days, 20%. Some of the standouts in that area, Rite Aid actually gained 6% on the day. That's the equivalent of like a Walgreens or CVS, things like that. And GameStop, there you go, actually closed down on the day. It was positive until the end of the day, lost 4%. GameStop beat on earnings by 48 cents. They did get rid of their guidance going forward after reporting the earnings there. A couple other things and then we'll move on. You've got the price of oil down 3% on the day, just about making new lows, down 3.3% on the day. OIH, XOP all going with them. Look, this is not good for an overall bounce in the market and the economy. You got to have oil in the mix as well. They don't have to be leaders, but oil has to participate if we're going to find ourselves coming out of this most recent decline there. So something to consider. 2% of the S&P 500 is above the 50-day moving average. That's it. Basically 2 to 4% is where we've been hovering. It's still 14 stocks as of today. You had one new high today. That's Citrix. Remember, I've been covering all week which stocks are closest to making new 52-week highs. Citrix did go ahead and make that new high today, took care of that. Some of the other ones that are getting close, Digital Realty, right? Almost back to highs. You can see the amazing recovery that it had this week. It's got 8% to go. Netflix, a popular one that's getting near highs. It did lose a little bit today, but still 8% to go. And Eli Lilly had a good day, I know it finished down on the day, but trying to recover, get back to those 52-week highs. This is just me pointing out strength, whether you like to look at this stuff or not. Hanes Brands hit new 52-week lows, and that's your only 52-week low for the day, which is good news. The later part of this week, we saw a lot of stocks coming off of their lows, which is attractive, I think. So we'll see. Again, I think you need more information from the markets. I was hoping to see one or the other today. Instead, we got about the middle ground of what I was expecting. I did take a moment and go through all of the stocks just today that made virus-related adjustments. So what we did is we said, okay, any stock that cut their dividend, took away their guidance, has any negotiations with companies, any sort of debt restructuring or anything because of this virus, and I gave up. Let me just go through these real quick. There were too many to talk about. There was a lot of bad news out there today, so I think the markets could have been a lot worse, but check it out. Cheesecake Factory, symbol CAKE. You know the Cheesecake Factory. You've been there, right? Check this out. Imagine if you could do this as an individual. They have gone to their landlords and said, we're not going to pay the rent for April. Work something out with us. Can you do that as a person, right? Companies can do it. They're doing that. ConAgra is, this was good news, giving cash bonuses to all employees working during the virus. General Motors cutting salaries for their employees, cutting plants. I believe Mr. Trump told them to get back to work just a minute ago. Hilton Group canceled buybacks. They canceled their dividend. Tesla cut their new Nevada staff 75%. They're worried about the virus now. Old Elon Musk's tweet from a couple weeks ago, the coronavirus is stupid. Good. The Gap got rid of their dividend, got rid of guidance, and Moody's downgraded their debt to junk. KBH got rid of their guidance. Home Depot, is good news, was upgraded today on the analysts. Was it Apollo? Can't remember who. They upgraded them saying that they're going to be not as impacted by the virus. Limited Brands got rid of their guidance, got rid of their dividend. And Hanes Brand, which we just mentioned, got rid of their guidance, and they are drawing down more debt. Pretty cool. Oh, Lululemon, they also reported earnings. They did beat on earnings. They got rid of their guidance. Who else do we have here? Yeah, that's pretty much it before I gave up because there were so many. So what I thought I'd do is every day I'll try to get as many as I can before I get tired of looking them up and share them with you because there's a lot of that going on. There's also going to be more companies, well, not yet, but there's going to be companies that delay their earnings. So we're all waiting for earnings to come out, see how this is affecting them. They now have the ability to delay 45 days according to the SEC. They've been given that permission by the SEC. I suspect you're going to see a lot of them doing that because they probably need to. All right, we'll wrap it up with some recession performance. I'm going to point this out. This was a class that we did 2 weeks ago for customers. I'm going to share some of that information with you here. the question is, if this is a recession and we're falling, right? If you look at a recession, how long through the recession until the markets bottom? That's what we wanted to know. That's the study that we put together for our customers. So recession starts here, it ends here, or you guys are looking at it this way. So about how far along until we bottom? Do we tend to bottom at the beginning, the end, somewhere in the middle, right? Because stock markets always bottom during recessions. They never have ever bottomed after a recession. So it makes you understand that you have to participate in a declining market, because if it's labeled a recession, first of all, it's going to be later before you find out. But if it gets labeled as a recession, the market has already bounced. And so you don't want to miss out on that. So what we did is we looked at 12 different recessions. We went back to 1945. We covered the last 12 different recessions there. I actually showed customers every single one of those recessions to show them where the markets actually bottomed, to give them an idea. Since 1945, the S&P has averaged, during the recession, the low of the recession comes 45% of the way through the recession. So to give you an idea what that looks like, let's take a look. Here's a slide I put together for you guys. Here is the last recession, right? So I just put it up here for you. The gray area is the start of the recession, and then over here is the end of the recession. What we were measuring was, okay, from the start of the recession, what percentage did we have to go through until we hit a bottom there? This one happened a little bit later. I think it was 67% of the way through the recession, maybe a little bit more. Maybe it was 77. Looks like more 77 there. But anyways, we wanted to know how much do we have to suffer through a recession before we start seeing a bottom. The average is 45% of the way through the recession, or halfway. The trick is defining when the recession starts and stops. But nonetheless, you get what I'm trying to focus on here. Now, the key to this is you have to invest during recession. You have no choice. Whether you feel good about it or not, you have to invest during recessions, because we know the markets bottom during the recession. And then what we measured was from the bottom of the recession to the end. How much? What was the average gain from the bottom all the way to the end of the recession? And it's 24%, 24.1%. And so because of that, you can't afford to miss out on the 24.1%. So all of you that say, yep, this is a recession, I'm going to get out, and then I'll wait until they say all clear, you miss out on an average of 24.1%. That's the kind of data that I like to put together for customers, because now it's not my opinion that I think you should invest while things are going lower. It's pure fact. And I can show you how you're going to miss out if you don't grin and bear it and dive through the recession trying to invest as much as you can. 3 weeks ago, we did a class on the 4 things that you should be doing while the stock market is falling, how to take advantage of this recession rather than sit under a blanket and cry until it's over. So if you're one of our customers, I hope you'll check that out. Always chock full of data and lots of good, helpful tips there. All right, that's all I have for you here today. The beginning of the week next week, we've got Restoration Hardware, Warren Buffett's new investment there. They will report earnings Monday after the close. You got earnings from John Deere, 76 cents, and Humana, 63 cents. I will take a chance to try to answer some of your questions, and then I am done. I'm going to sleep until like tomorrow at noon, and we'll get this thing fired back up. By the way, tomorrow we'll be posting our update to our Stock Madness. We're playing a fun game here between me and Cody back there called Stock Madness, where we're pitting stocks against each other, bracket style, just like they do in the basketball games. Because you guys don't have March Madness, we thought, well, we'll give you some form of madness there. That second video we'll post tomorrow, and we're going to keep you updated on Saturdays so that you know what's going on there. And I'm told, by the way, the prize is cool. I don't know what the prize is, but I've been told that it's something really, really cool. So I'm competing. Like I really want to win whatever this thing is. I have a feeling it costs me money to win the prize, but it's okay. We'll see what happens. Step 1, invest. Step 2, cry. Step 3, go back to step 1. Oh, man. Do you think Monday will be green? I have no idea. I have no idea. If we go by so we'll still be in March, by the way, and if we go by the average performance, Monday technically is averaged a positive gain there. So if you're going by just this 1 month stats, I guess you could do that, but we'll see. Yep. The Fed injected stimulus October, stocks bottom in March, expecting the same. It could be, yeah. I mean, it'd be interesting to plot that actual stimulus on there, TARP and all that great stuff that they went through. Well, that was after, I think. Yep. Do we know the strings for companies getting the bailout, equity, government boards? No, actually, we don't have any clarity on that. Yep. You're about to file 2018-19 taxes this weekend. Is it too late for you to get a stimulus check? You just have to file for 2019. And while you're at it, I guess 18 as well. That would probably be a good idea. But you just have to file for 2019. That's what they're going to use to justify whether you qualify, and if so, how much. Because there's a phase out. So you don't just get $1,200. There's a phase out at $75,000. You start making more than that, and they phase it out. I think it's 5%. From there. So go back and watch the video from Monday. It's the exact same thing. Maybe I'll do another one that just covers this one. There's really no difference, but maybe we'll do that to put up another video. It used to be, yeah, sell on the weekends, buy on a Monday. Yep. We did a study on that a while back, actually. What happens if you bought on a Monday, sold on a Friday, or bought on a Friday, sold on a Monday? And we just tried to see what the differences would be there for fun. How many days of the week has the market moved by over 1%? Yeah, I don't know. We've been tracking to the downside just to see how many down days there was there. Interesting. How will the month-end rebalancing affect the market? There are lots of analysts that believe that's really what caused the bounce, was rebalancing. Because if you take, and I just did this video for you guys on the FinTip series, if you take a 60-40 stock to bond split and you stress test it against what just happened, what you end up finding, now I had to use the 10-year treasury for this, but if you use the 60-40 split, and you look at the low that just happened the other day, that 60-40 split was 55-45, which causes most systems to automatically rebalance. And so that means you had to buy 5% more in equities. Times that by all the investors in 401ks, that is billions of dollars that had to buy on a rebalance when they got triggered. So a lot of people are thinking that's probably what caused this initial bounce here, at least the start of it. And then you have the emotional investors following suit there. So we'll see. If you don't file until July 15th, won't the stimulus be calculated on 2018? You just have to file. All you got to do is file. Even though you're going to wait till July 15th to pay, you just have to file. So you might want to get that done because I think checks go out in 3 weeks, if I'm not mistaken. Yep. Yeah, right? I love it. Toilet paper's the new gold. Oh man. Yeah, you got some discounts out there. You definitely have. If you had a lot of money to start, now you see the prices of these things, you've got some serious buying power there. That's pretty cool. Yeah. Waiting for your 1095. Yeah, there'll be a, okay, so for example, if you didn't have to file taxes for last year, but you're still entitled to the stimulus check, there will be a separate form, and you will file that, which essentially files something for 2019. It may be zeros, you don't have to pay, you won't get a refund, but it puts you in the 2019 filing, and then you will get the refund. I'm sure they're going to do the same thing. In 2009, it was an actual card. They sent you a card, and you just had, if you didn't have to file for taxes, all they asked you was just fill it out, send it back in, and you would qualify for it. So I don't know if that's still going to be the case. Maybe they'll do it digitally this time, but you still had to file. Yep. I like it. Would you take your 401k and move it to an IRA or wait if you just switch jobs? I'm always going to suggest you move it to an IRA. You have more options. You also have the option to convert to a Roth if that makes sense, whether it's all or some of it. That's a big thing that you might want to focus in on right now. So because of that, I would say move it to the IRA. Then you can decide from there. Maybe if you just prefer different investments or if you've been thinking about converting, makes it a lot easier. I heard that it was direct deposit. So if you already filed your 2019 taxes and you did direct deposit for your refund or paid through your bank, I heard that it was going to be direct deposit. You won't have to do anything. I just heard that like 15 minutes ago, so that could change. But that's the way I think it is at the moment. If you moved jobs, better to roll. Oh, you're just helping us out. All right, thank you. You like your United Airlines there? I love it. Cool. And that's true. There are lots of random costs in there. Lots of times the employers will pay for 401k fees, so you're really just paying for the mutual fund fees, which are respectable. I mean, some of them are outrageous, but most of them are respectable. So I wouldn't use fees as a comparison. because it's such a small amount, you may find you pay about as much somewhere else. And if not, if there's a sizable difference, of course, by all means, check that out. I love it. All right, I'm going to wrap it up there. I appreciate you guys hanging out here with me today. Check out our video tomorrow, our Stock Madness update on how the stocks performed. We're doing 2-week time periods. So this is the first week of Stock Madness. Next week will be the actual end of the bracket. We'll move on to the Final Four, and we'll see what happens there. But hey, have a great rest of your day. Have a good weekend, and we'll talk to you guys later.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new FinTips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.